Should I start then?
Yes.
Okay, so good afternoon, everyone, and happy New Year to all. Thanks for joining us on a relaxing Saturday afternoon. Here we are to kind of discuss buy-to-let investments in the UK using SPVs and limited company with experts from all UK and non-UK residents. So the first thing first, what I would like to tell you is about myself. I am Ranjit Sawant. I'm a finance transformation consultant, helping various fintech, banking, and insurance companies and pharma companies for over past 23 years. I've managed various workshops and interviewed industries leading leaders while on projects. Sorry, I can hear some noise in the background. Shakti Dasan, can you just mute your self, please? That would be great. Shakti Dasan.
Yeah, yeah.
So, moving on, our target audience, anyone, whether who's our target audience? Anyone and everyone. Anyone who's there in the UK or not there in the UK. Anyone who wants to dream of becoming the first time landlord, property owner, and start earning a rental income, or anyone who's looking for an opportunity to expand your real estate portfolio in UK tax efficiently, and or anyone who don't need to be a resident in the UK. And how do we classify this? If you look at our economy as such, or the overall population, we could categorize this population into three layers, and those you could see on the screen, which is L1, L2, and L3. The L1 is the top notch people who've got loads of money, loads of skills, be it the Ambanis and Tatas. The L2 is the population where the small scale industries, where people who've got limited resources and limited skills. And L3, like me myself, who are employees and self-employed people who work probably on daily wages or on a monthly salary, and who would try to make their living, earn their bread and butter by slogging into a 9 to 5 job and get their monthly income or a weekly income. And on the very next day, when their salary is credited to their account, uh, the very next day, the salaries, the money from the bank account is gone because I have to pay my bills, I have to pay my mortgage and stuff like that. What we are trying to do is all these people in the lower level, which is the L3, like me, would want to kind of climb the ladder up, which is to become a L2 guy or probably a L1 guy. And this is where we are trying to focus ourselves to make sure that we all from the L3 bracket would come together and make sure that cumulatively we can bridge the boundaries and climb up. So that's what we are looking at, and that's our target. Few facts about what we are talking about is over 250,000 limited companies that existed in the UK to hold investment properties. In 2020, there were 60% of buy-to-let purchases made through companies as opposed to just 15% in 2015. 41,700 new companies were formed in 2020, an increase of 23% since 2019, according to Hampton International Survey. So what does it signify? That here we have an opportunity that we can probably milk this situation and try and climb the ladder from the L2 level to L3 level to probably L2 level, if not L1. So that's the whole idea of this particular session. We have a number of experts here, and I'll kind of introduce them accordingly as we go along. The very first speaker we have is Ajay Prakash. Ajay Prakash is an entrepreneur with more than 18 years of IT experience living in London, passionate about working with the aspiring entrepreneurs to develop business models. He is an international portfolio landlord who launched this drive to replicate his success for over the overseas investors as well as the investors within the UK. So I would invite Ajay to talk about what he thinks about the overall model of metal properties, what we can offer to the audience, be it the UK audience or the non-UK audience. Ajay, here you go. Ajay, you are on mute.
Yes. Recently, there was a survey which says for the people who are disabled, we should respect them and we should not be using the word mute. So we have to find out. Yes, so we have to find out the way to replace the word mute. Anyway, thank you very much. It's a pleasure to see everyone here. It's quite warm. Thank you. Thanks a lot. So in terms of replicating the success, what should I say that when I came to UK, and I have been repeating this story, that when I came to UK, almost 10 years, I did not have any house. And I used to think that, you know what, it's better to be in tenancy rather than a house. And then a day came when I judged, somebody made me to understand one needs a mentor in a way. One made me to understand that what's the benefit and what I lost. And I lost completely close to 2-3 houses in that doing so. I could have easily made 2-3 houses in 10 years of time. And that too without the new concept of SPV. If I would have started that time, I could have easily owned hundreds of houses in that way, you know, the way that efficiently that we have now come up with a model. So what's the need of, so why I'm doing it? Because I want to replicate what I missed. I want to, and now what success I have got just now. Yes, I want to replicate that success for others so that they can also invest and grow. Taking the example, in 20 years almost, the UK property market has tripled. So that means if you would have put the money into the share market, then you would have suppose £100, then that share market would have given you £200 or £220, something like that. But if you would have invested into the property market, then that could have easily surpassed £300. So you can see that over the time, the property market has performed or outperformed the stock market. Okay. Now coming to why, other than that, what's the reason? So I have repeated in the last session also, I said that in the UK, other than the investment aspect, which is the core, that how your money grows. Yeah. Other than that, like 12% minimum return that you get. Ranjit, you can actually go to the next slide if you want. Yes. So other than this 12%, the BTL market can give you, and why will you invest? Because UK has got transparency index, the best in the world. So #1 transparency index, which means that all the processes, all the compliance and everything is so transparent to others that people believe in it. And also the legal system is so strong that it's next to impossible to cheat you in this area. That means cheating means fraud you to be the owner. So you buy the property and somebody else starts taking over that property. Yes. So it will be certainly that legal side is so strong. Other than that, if you talk about the rental market in UK is very demanding. Yes. So because it has got almost 100,000 houses per year we are missing as compared to the UK population. 67 million population is the UK's population right now. And if we talk about in another 7 to 8 years, it is going to be 70 millions. So 70 millions population as compared to 67, and the UK property market is not going to match that level. So 100,000 houses per year, at least you are seeing the gap as compared to the population growth. So that's why the demand is quite high. The rental income is quite high. As I've been repeating that if I invest in India, as an example, I have invested many property in India, in 1 crore, that is 100,000 pound. If I invest, I get only 200 pound as a return maximum. Yes, maximum I get 200 pound as a return in terms of gross rental income I'm talking about per month. But if you're talking about the gross rental income here, in the same money, you can easily get 800 pound easily. Yeah, it can be 800 to 1,000 pound easily you can make out of that from the same money, directly cash investment. Forget about the mortgage, which is a creative model where you can easily go for 20% rental income as well. So it's quite lucrative. It's a consistent cash flow. Where to invest? So why to invest? I give you the where to invest. So you should invest into those areas where you see that it's still recovering from the 2008 crash. So remember, in 2008, the whole market had crashed, including the property market. And the region to invest right now is the northeast side, which we have chosen, or western side as well. But I would say the northeast side is quite safe to, that's the highest growth because it hasn't still recovered from that. All other areas have almost matched their property rate. So you still have a very high chance to invest. And at least in those areas, 10%, even if we have seen 10% per month growth has seen, forget about the per year. Some of the growth are 10% per month. And that's something we can share you the link as well for that. So that's the growth we are talking about. And what else? See, the England has been, which area? So England has been the highest in terms of the property volume, money-wise. The highest property rate is in England. London is most saturated, so there is no growth as such in the London. So that means don't try to invest, because here we are also talking about increasing your chance to invest and increasing the net return. Yes. So that's why London is not a very good place to have that net return. Although, so that these are the reasons where, how to, means with whom you should invest. People who have got the experience. Yeah, go with them.
Sure. Thanks. Should we go along with the questions, Ajay? Ajay, you're on mute.
Yes. So what's the first step? So first step, as in terms of that, first thing first that you look to is the sourcing, that you should go to the right area and with the right investment in the mindset that what is, are you UK resident? Are you outside the UK resident? What's the purpose of the buying? Do you want to live into that property, or is it going to be a second home, or is it just for the buy to let? Yes, you're buying just to let. So you should define yourself, what's the requirement of the property. So sourcing is one of the biggest thing. Then after that, once you source, you know that you have sourced, you know which property to buy. Next step is what will be the maximum output? So how do you maximize your output? And it's very well known right now because the legislation changes, because of the taxation changes. SPV is the best to invest with. So you maximize your return under SPV. Third point is, so who will do the portfolio? So you become the portfolio manager, but there should be a manager to do that. So you have the portfolio, you want to manage that. So all these points are at the beginning. These are the points you should thoughtfully think how your taxation and accounting will be taken care of. Yes. So once you have company formation, sourcing, taxation done, all these model, if the right business model, even I know one of the company who has even thought to the next level, which is pension management as well, and so we are thinking towards that. So I mean, there are many ways. You should have a solid way to start with. So get in touch with someone like us or anybody who has the good knowledge about into this industry, and start from there. So that's the first step. You want to move to the next one. Is it the good time for the invest in the BTL, buy to let property? What is the current market status? So current market status, when we talk about, is it the best? I would say yes, because there are some questions at the moment. We can take Okay, so there is a question, which Northeast area that we look into right now? Nice question. Right now, we are focused towards the Durham, County Durham, that hasn't recovered from the 2008 loss, if that clarifies that. Okay, so is it a good time? I would say yes, because the property market is seeing the maximum growth right now. Even pre-pandemic phase, it's still recovering. So this is a very good time. What are the areas to invest? I told you one of the biggest areas, and that I'm talking about from the national statistics. Yes, you can refer those, and you can say that, okay, Northeast has been the biggest recovery point. Other than that, like Scotland has got 16%, but do you want to go directly to Scotland without knowing it? So that's why I'm saying. Other than that, growth in the although England sees the growth as 7% to 8% right now, yes, but England is the most safest place right now to invest in, because the fluctuations are less here. Okay, so you see you want to put your money into an area where it's safe as well. So 10%, it says 7 to 8%, but actually it is 10% growing. Yes, so UK's strongest performing annual house price growth is 10.4%. You can see that into our slide. I already told you about 300% growth. So now coming to, if I source a property deal from you, how can you manage to buy and manage property? Good. So our help start from the sourcing itself. We start from the step number one, that is sourcing. It has to be right model. You will get a consultancy chance with us, which will help you in setting up the right model for your business. Yeah, so we have already set up the model for the customers that, or the investors basically, that they can go with this. We have few models, 2 to 3 models, that how you want to invest into the property business. And then after that, once you have chosen the best, like some people say that I have got only 10,000 pound in my hand, can I invest? And I will say yes, minimum 10,000 pound you can invest easily. Below that, of course, you will struggle to invest, but as far as 10,000 pound is there, you can invest. So we have that model. Second model is, do you want to own the property on your own completely? Yes, you can. So you have 50,000 pound, 40,000 pound, you can own the property. So there was a question today coming from Murali. I don't know whether he had joined. I think his wife might have joined. I don't know her name. But the question was, we had an ad into the Facebook. It says 53.6K. And they had an they had kind of conversation amongst them that no, it cannot be true. 53.6 cannot be the right one. It must be 500,000. Something is missing, some zero is missing. And when the call came, I made them understand how we have made it possible, why that area, what are the growth into that area. And that's why people who want to buy on their own, feel free. Yes, but what we do is to make sure even in those areas which are the postcode where you need to go for, and where the maximum return is about to come, where the rental, so tenant has to be high in that area. That's another point. Yes, so we research everything and then come up with the model. So how can we manage the property management is there are many aspects. One is the sourcing. The second step is helping you to buy the property. Once you have bought it, like in that comes the solicitors help. In that comes the mortgage help. Yes, so we are there. We have the connected solutions for all. Then even so, once you bought it, you need the refurbishment work done. We will get it done for you, so you don't have to even go and manage that side of it. So and that we are not charging for that management part. We're not charging for the property refurbishment part. We know that this property needs to have the refurbishment. As far as you pay the cost to the builder, that's it. And you know from the transparency side that you're paying to the builder and how much you're paying to the builder. You're not paying to us, you're paying to the builder. So all costs are transparent. Coming to the post management, that means tenant finding, we will help you. And for that, there's a certain charge. The property management company charges for that. You have to pay for that. And we are not making any money for there as well. Okay. So even that is sorted. Then comes the finding, if the property is empty, then who will go and find the tenant? So we will do that for you. Then second part is, if the property is being well maintained or not by the tenant, we will keep giving you the reports for that. So, and then what is the right time to exit from that property and buy something new and get the mortgage done or sell that property? We will advise you that as well, because this is what we are calling the property investment management. We are not talking, we are property management company. We are saying property investment management company, where we know which time you need to exit or what is the right time to get the mortgage. Example, 8 months back, I bought a property in 46.8 or 46 point something, right? And I'm talking 46,000 complete ownership. We bought it. And 8 months later, now is the time when we found that property has gone quite up and we are getting it remortgaged. We are already getting the rent from there close to £450. And then we are getting it remortgaged. Remortgaging is giving us 73,000 valuation for that property. So 46 to 73,000. How much I had put? Now 75% of the money is coming to our bank. So 75% is 53,000. So think about 53,000 is being given for the property of 46,000, and we still have 25% stake into that property. So 75% of the bank, 25% still remains with the metal. So think about, that's the lucrative, that's the kind of management we want to give it to you. Okay, are you covering commercial property? I'm the first time investor, will you help? Good question. So we will share you the investment deals, including the commercial ones as well. Okay, we have one ready right away. We'll share, if somebody is interested, we can share that as well. So, however, we are specializing ourselves into one specific area, that is buy to let into the residential side, because that's where I see the gap of the 100,000 per year being invested into. So we'll have more into that area, and commercial property comes with its own, whether that property has got someone on the upstairs or not. What do you call it? On the downstairs, their property is there, the shops are there in High Street. On the top of it, people live there. Yeah? So there's complexity in terms of the paperwork, but we do that if you are interested. I'm first time investor, most welcome. There was a question again today. I was talking to someone that I'm the first time investor. I said to them, like, you are doing this one through the property management company. That means you are not owning this property under your name. So you still remain the first time buyer. You can buy under the SPV. You still remain, if you bought the home in UK, you still remain the first time buyer, and you can get the government's stamp duty help and all that under that. So yes, that is quite possible for the first time buyer as well. Okay, so how much we charge for the sourcing? That's a very good question as well. That had the last slide had that option, that part. We charge 2,500, but we save that charge and then we charge you. So when we buy the property, we make sure we have pressed enough. We have given enough discount. We have taken enough discount from the seller that it has already gone. So if his property is close to, say, 50,000, it was 50,000 worth for the market. Yes, but I have bought in 47K for you. So that means we lock the deal at 47. That deal comes first to us, and then that's where we negotiate. So that's why you will not find that deal in the market. Okay, so 47K, we have already researched about that property, and then we have bought it. So 3,000 we already saved, or comes at least £2,000 we have already saved there. And then after that, we save you, suppose it's kind of creative solution sometime, we can sometimes save the stamp duty as well. However, that's I mean, there are many ways to do that. So we save you there, we save into this, we buy the property which is sometimes tenanted. So day one, most of the property that we have bought in recently, they have already been tenanted. So tenant is already there. So that means from day one, you are earning the money. So you're not losing at all over there by going into. So 2,500 for that we charge, and we do not expect any extra money from there. So that means what we say, Rajiv ji, can you please show one ad, please, that we have given into the Facebook? as an example.
Okay, let me just
Yeah.
continue with that, and I will
Yes.
share with that.
So
Okay.
we'll show you how do we create an ad and show it that for the potential buyers. So what we do, we have our formula to create what will be the return on the property. So what will be the net return? A net return means you pay the fee to us, you pay the fee to the solicitor, you pay to the fee to the mortgage advisor. Every fee is included. Yes, including the cost of running it. So you might have to invest some money into say at the end of the year to replace something in the house, something is broken, so you need to put some money towards that also. So we are taking care of each cost, and at the end we come up with the gross cost, and that's what we publish in the market. So this is your gross cost, so that none of the thing more than that, there's not even a single penny you have to invest from the at that time you have to think about investing. So that's the kind of model that we want to create, a transparent, very transparent, where you know where the money going, how much I'm investing. It's not like you go to the Zoopla and see, oh, this property is 300,000 pound, and then you come to know, oh, you know what, I have to put some more money keep some more money for the stamp duty, I have to keep some more money for the mortgage advisor, or I have to, even if the bank is mortgaging you, they charge you, so I have to include that money as well. Every money is taken care of, that part. Yes. So we are not we are not trying to make the money, we are trying to create an ecosystem where we can help each other. So tomorrow we are having so many customers, or we have so many investors, one wants to sell, another is ready to buy. That's the help we are trying to create, a system where each others are helping to grow. Thank you very much.
Okay,
Thank
Ranjit, back to
Yeah,
yours. Yeah.
yeah. Thanks, Ajay. So our next speaker is Shez. Shez is a mortgage broker and has been in the industry since 2011. Wow, that's almost a decade old guy in the market, Shez. Worked in facilitation of mortgages with multiple banks in capacity of consultant to a senior level. Currently, he is a director of HR Financial Services and also a property investor of multiple different types of houses owned via mortgages and self-funding. So, Shez, I welcome you to this session, and I have got some questions which I'll kind of go slide by slide, and let me know once you're done with the answering. I'll move on to the next slide. So, the first question goes here. How do you think the social housing sector will proceed in 2022? There you go.
Hello, everyone. Okay, so social housing sector, right? First of all, just to mention, it's worth mentioning for, especially for people who may be new to what social housing is. It's quite a specialist strategy when it comes to investment as an investment, property investment, but also as a mortgage lending. And social housing is typically where you're given rent, or guaranteed rent, I must say, because that's what makes it attractive. You're given guaranteed rent by either the council or a registered like charity or social housing landlord, who will guarantee the rent over a certain period of time. Typically, that's like 3 to 5 years. And usually they cover all the repairs within certain limit. And so, you're quite headache free. To be honest, in terms of property strategy, for me, in my personal opinion, that's probably the most passive way to kind of have a property investment strategy. Um, but yeah, social housing is quite specialist. Not every lender likes to lend on it because of the risk associated. Um, the major risk is the reputational damage, because if a lender had to repossess a property, the reputation damage that could come along with that, because of the type of tenant they'll have to kick out. Because typically the type of tenant that's in a social housing property is like people like that's homeless, victim of domestic abuse, ex-military, that kind of vulnerable people, basically, is what social housing people, tenants would be like. So that's why a lot of lenders don't like it, because if they had to repossess the property, they'll have to kick those type of people out. And as you can imagine, that's, the media will just make a big meal out of this, and reputational damage will be massive. So in regards to social housing as a strategy, I've seen it pick up, especially over the lockdown period. You can logically imagine why that will be. You know, people's been losing jobs and rental income's been decreasing. So people's been looking at other alternative ways of replacing the rental income, and social housing is a guaranteed method. It does come with its risk. Not, for example, one of the first thing that a lender will look at is whether you've got the contract in place for the social housing before they lend on it. And there's only a handful of lenders that will lend on social housing. But yeah, the one of the first thing they will look at is whether the contract, the agreement is in place with the social housing provider. Now, the social housing provider, for them to give you the agreement, they've got certain checks that they have to do on yourself as well as the property. So the property itself has to meet certain checks. For example, just to give you a brief example, one of the basic first check they will do on the property is to make sure the property has never had any kind of violence or abuse recorded against it that's happened in that property before they can take that property off you. Because you can, as you can imagine, the type of people they're about to put in there, they need to make sure there's never going to be anything coming back there, you know, anyone coming back there or anything to put those people in any further, you know, danger or anything like that, basically. So yes, it's growing. I'll be honest, from what I've noticed, for investors that I arrange mortgages for, it's something that they've been going more and more into it. And so, you know, proceeding into 2022, personally, I can only see it going up and up. Um, so yeah, that will be my bit on that. To be honest with you, there's a lot I can go more into details about social housing, but I'll end it there. Just we can keep this not a bit short.
Sure. You can go on with the next question. How difficult is it to get limited company mortgage and the minimum LTV?
Yeah, so it is becoming easier, I must say. It is becoming easier because, as Ranjit said from the start, the amount of SPVs that's been created over the last few years is a crazy amount. So, you know, with that becoming such a popular way of investors investing into buy-to-let properties now, lenders are having to adapt, and more lenders are having to come on board to lend to limited companies, whereas before there was less amount of lenders that was willing to do it. They used to, in a way, drive people to do it more in personal name before. However, over the last few years, more and more lenders are coming on board, so it is becoming easier. It is a little bit more difficult than buying in your personal name, but like I said, with the amount of people going down that route, it is becoming becoming easier because more lenders are coming on board, which means more competition. And you know, it's almost coming to a level playing field as people used to own properties in their personal name. LTVs you mentioned is typically similar to personal name buy to let, which is 75%. There is probably less than a handful of lenders out there that will go up to 80%. But when you balance out the rates they offer with that, it's better to stay 75% or below.
Sure. Thanks, Shares. The next question is, if a SPV limited company is completely owned by overseas shareholders in India, can we still get a mortgage?
Uh, it's extremely difficult. Extremely difficult. I'll be very honest. The lenders that'll probably do it, when you are going through the process, I'll be very honest, it will be so painful that you'll probably just say, "I'm pulling out of this." Put it that.
Cool. No worries. Moving on to the next one. How to buy a buy-to-let property when someone has a HTB equity mortgage, creating a new BTL company, or any other options?
Okay. So first of all, a help to buy is designed for people that are struggling to get on the property ladder.
Yeah.
So it's designed to help people get on the property ladder, and as such, they expect you to only own that property. If you come into a position to be able to own another property, they would expect you to be paying off that help to buy equity loan. If you do buy another property whilst you've got a help to buy, hey, this will be recorded with HMRC, and eventually at some point they will cross-reference everything. We'll see that you own a help to buy, you're also owning a buy-to-let in your personal name, and the Help to Buy loan will be called upon, which means you'll have to pay this back or sell your property and find another way. Creating an SPV, I wouldn't like to use the word workaround, but that's a business in its own entity. So that's separate. If you were to create a business and buy in there, that's a different thing. It's just like you setting up a business and trading chocolates or, you know, whatever commodity you want to do. So that's just a separate business, and that won't be counted as you owning a Help to Buy, but also owning another property. The other way is, and this is a most common way of when people come to the position to be able to invest in property and buy what's it called, additional properties, is to remortgage your existing property. And usually by that point, you've owned this property for a certain number of years, and the property has appreciated in value, and there's enough value for you to remortgage, pull out the funds that's enough to repay the Help to Buy, and you now got a bigger mortgage. However, you now own the whole property without any help from the government, no Help to Buy in there anymore. And usually, I say usually, but sometimes there is enough equity for you to pull out, enough equity to repay the Help to Buy, but also some money left over to add on top of whatever funds you've accumulated by savings or whatnot, to be able to go and invest and buy further properties as buy to let in your personal name.
Okay. Thank you so much, Shez. The
Yes, there is
next,
a very good question. Sorry to
sorry, yeah,
cross
go on,
check.
go on, go on.
There's a very good question. So that it's asking that, can there be a problem remortgaging BTL property owned personally or using company if the owner moves out of UK after owning for a year?
For 1 year, okay. There is a certain number of days, which I think it's 186 days. That if you go above that, is it 186? I'll have to,
Take
I'll have
it
to
180 days. Yes, take it 180 days.
180.
From the taxation problem, that starts becoming a problem, right?
Yeah, so when it goes above 180 days or so, you start falling into the expat category, and then we'll have to look at that kind of criteria. But there is like special circumstances where someone has had to go abroad, who was originally, for example, someone originally from India, parents is in some kind of trouble, they've had to go back. Those are special circumstances where there is a lot of evidence that's needed to prove why you've had to be out of the country for so long. So yeah, but other than that, it does become more difficult, but not impossible.
Does that answer your question, Ajay?
There was a question on the chat, says regarding the interest rate. I have answered, but I'm not sure about the range. For the company, usually 2.5 to 3% range is their interest rate, right? Is that correct, or says?
You're on mute.
Oh,
Shez, you're on mute.
sorry, guys. Rajiv, would you just repeat that a little again, please?
So there was a question, what is the interest rate for buy to let using company or using individual? So what is the range of interest rate?
Range, I would say, so literally just before coming on the call today, I was out earlier, I went to see a client, and I'm about to do another one for him, and the rate that I've managed to secure for him will be 2.88%. So let's call it 3%. Let's call it 3%. However, this is a British national.
Yeah.
If there's international people, foreign people as directors or part of the company, then the rates will go up. But I would say as a base, think of 3% onwards, where 3 to 5%. Sometimes can be more depending on the person's personal circumstances. For example, if someone's got bad credit, so because we haven't talked about that, we're just assuming everyone's got very good credit here.
Yeah.
But all of that comes into which can then boost the interest. Yeah.
Sure,
And
sure.
in case of individual, probably the interest rate would be a little bit cheaper than 3%, right? So it could be.
Absolutely.
Yeah.
But as you know, Rajiv, like they
Yeah.
can't no longer claim the interest on the mortgage.
Yes.
You know,
Yes.
so, yeah.
Okay, Ranjit, back to you.
Okay. Last question for you, Shez. Which mortgage option is easier to take? Buying under personal or SPV limited company?
I sort of answered that earlier, but
Yes,
as I
you did.
said, because of the amount, I believe you gave the stats earlier, Ranjit, the
Yeah.
amount of SPVs that's been created, in a way speaking, lenders has been forced to kind of match what they used to offer for people that was buying buy to let in their personal name. I would say now it's almost level playing field, to be honest with you. So that's a very difficult question to answer. But if I was forced to answer, I would say it's almost as easy as each other.
Yep. Thanks, Shes. And we move on to the third speaker of the panel, which is Rajiv Singh. Rajiv is a practicing chartered accountant in the UK with 16 years of experience in fintech consulting, accounting, and tax advisory. He's also a founder of prop tech company called Rent on Cloud. So you could see some of the logos out here, which would have that Rent on Cloud, and that's thanks to Rajiv. So Rajiv, here you go with your questions.
Okay. This first question is, what is buy to let SPV limited company and how this is different from owning as an individual? So as I said, SPV understand for a special purpose vehicle, which is actually designed for buying a property for investment purpose. So so this is a specific purpose to build a company. So it's different from general private limited company. So your purpose should be very targeted. So you can't do any other business apart from just letting and investing business. So that's about buy to let company definition and difference between owning individual. Right. So one clear difference is that the HM land registry. If you are buying as an individual, your name is on land registry paper on receipt document. But if you're buying as in a company, your company name will be on the land registry paper. There are few of the differences. Um, like SPV is a separate legal entity than your personal, so it has a limited liability um, in general. But in case of some mortgages, there are some directors' personal guarantee as well if you're buying from the mortgage. Um, Ownership right is secured and protected by the structuring documents. So there are proper documentation you have to build, not as just go in online and company house website and create a company. Most of the people do that same way, but it's not the ideal way. And third one is return on investment can be maximized using the company ownership structure. And then this can be a tax efficient when distributing the profit from your business. And from the estate planning point of view, SPV can be well structured during the incorporation of company or so that it can be minimized like inheritance tax in future. So can we go to the next question? Can a person with help to buy own limited company to invest in a property? So the help to buy scheme is designed for something else. It is for the people who wants to go into buying your own home, right? So like get a help from the government and then buy your own home for your living purpose. I don't think so that you can use this for scheme for owning a limited company to invest in property. No, I don't think so. You can't. So shall we go to the next? In a long run, is a buy to let better than putting all the saved down payment cash into stock and equity funds? Right. So as a prudent investors, I will always say you should have a balance of portfolio. So not keeping everything into one side of this. Although I will say that, okay, I'm in the real estate business. Real estate is gold investment. But again, um, you should have a risk appetite. How do you distribute your fund according to putting some cash in investment fund or mutual fund or shares or buying properties? But I will say keep a balance, having understand the risk portfolio and understand what is a return portfolio, and always should think about that. What is interest you are getting it, and what is a long-term benefit, and what is the liquidity. These are the consideration to think about. But again, to start investing, you should always consult your advisor. And then for the property investment purpose, metal property is here, so definitely they can guide. Next question is, if it is better to use limited company or buy to let or private buy to let. And second question, okay, what are the key things to be keep in mind starting a BTL journey? So I will keep some time on this slide. So yes, so if you're planning to purchase 1+ property, I would say, because some people say 5+, I say if we are planning to purchase more than one property, to in investment sector, I think that should be advisable to use the limited company options instead of buying yourself, because there are multiple consideration and I can count the multiple benefits. But on the slides, I have written down already answers for that. So minimum future stamp duty when you are buying, if somebody is buying the property via SPV, and then you can claim deduction of your interest on mortgages expenses fully, and it can be tax efficient when you are distributing the profit to the owner of the company. While in individual options, you will be charged for higher tax rate if you are in higher tax bracket, right? Again, company option is easy to buy in the secondary market, easy to buy and sell. Secondary market, which means investor market. So suppose if I'm looking for property to invest, I would always prefer to buy a company instead of a property to be under registration, because it's a quick sale and your no SDLT is paid. So stamp duty is, land tax is not paid. So you just have to buy shares and paid and then sell. Also in future, selling is easier. So then you can get lower capital gain tax rates on that if you are selling via company share properties. And also effective inheritance tax planning, right? But there are some kind of cons of these options, which means managing and accounting complexities. People used to, like, it could be costly affairs if you are hiring the high street accountants or legal consultants. But it's not anymore if you are managing property portfolio with the metal properties, because we provided like included services. We have partnered with metal properties to give the accounting and taxation services in the fraction of cost. So you are not paying extra cost this portfolio management in for the accounting and taxation things. So what is the key things to be keep in mind? So target to achieve minimum growth. I mean, what set target is net 12% a year. That's what I can say. Yes. Shall we
Just
go
would
to?
like to share,
Yeah.
that we recently, our customer, we sold a couple of properties to one guy in 50K, close to 50K, and that is earning 20% on the return on the investment, net return on the investment 20%. So that's the kind of creativity we have got.
Thank you, Ajay. So the next question I have an IT consulting company and interested to in investing in properties. My funds are in XYZCF. I have to create another company? What is the best way to invest with the minimum complications? Right. So to invest in real estate property, you should have a separate SPV limited company, which I have already spoke about. So what is the SPV limited company? Again, this is a special purpose vehicle only to hold the assets, right? So I think you have the IT consulting company, so you can definitely invest in the property portfolio using that vehicle company, right? Now, how to tax efficiently or less complicated, like you can transfer the fund. Um, so if you're buying by cash, I would say keep an investor agreement between your IT consulting company and your SPV company, and then transfer the fund, and so that you can keep some market arm's length rate interest rate to pay off your loan to your IT consulting company. So there could be one way to set a loan agreement, another way to set an equity agreement. So maybe your IT consulting company can be a holding company, so that you can share some equity. But if you are planning for mortgage options, you have to first take advice for the mortgage advisor as well. What is the best option? Because as an accountant, I can say any of the options, right? But from the underwriter's perspective, what is the complications that also need to be considered? And says is the person you can get in contact later stage, right? So yeah,
Rajiv
I have
ji, there's
answered.
a question.
Yeah,
There's a
yeah.
question. In worst case scenario, if we don't get rents, would that be declared as losses either via SPV or via personal BTL?
No, I mean, if you are so it's called void period. So if you are not earning rent, you cannot claim through HMRC tax return that you lost the rent as an expenses. Okay. For the book presentation, you can do anything, whatever you want to do, right? So but it will not be allowed for deduction for the taxation perspective. So that's the answer. So you can't claim the expenses loss provisioning for the rent. So yeah.
Yeah, but that is having said that, because it's not counted in the income, so you will not have to pay the tax.
Correct. So, I mean, no, but question, I think it's targeting that to claim the
Yes,
expenses, the loss of rent expenses. That is not actually incurred expenses. It's just a assumed expense, right? So,
and that
um,
doesn't happen in the personal name as well. So it's
yeah,
no
yeah.
different.
In any case, in a personal tax return also, you can't claim the expenses for the loss of rent. Okay, so next question is, what is the best way to invest in second property? Okay, there are multiple formulas, and if you have attended multiple different seminars, right? So, I mean, there's no best or worst. Okay, so whatever works for you, but I can say there are multiple things what I have experienced myself that I can share with you. So before joining metal properties, I was using my own portfolio structure. So I buy the property and raise the equity via some time gap, or maybe adding some value to the property. And once you raise the price of the, then you can do the remortgage and then get the equity cash out from that property. There's one way. There is a recently I have heard some new strategy from sales, like cross bridging. These are very technical concepts, right? So that's also very interesting. Instead of withdrawing the cash, you can actually do the bridging. That's also options are available to get it financed and your next project. Also, there are other options to go to a second property if you have if you can gather your like collaborations with another people, like joint ventures. You can actually inject some fund and then you can buy next property, right? So I hope I have answered that.
I think,
Then
thank you, Rajiv ji. I think that this is where our expertise will help you. That's why we say invest with expertise, so that's where the metal property helps you to specialize the solution. This is where you will get lots of consultation from us once you invest with us,
right.
through us.
Yeah, so the next question I can thank you, Ajay. So next question I have: how tax can be saved using limited company ownership? What are the trust tax planning? How to reduce CGT? And is there another business structure than using limited company? CGT here I understand from capital gain tax. So, and trust and tax planning, it's basically for IHT, inheritance tax. So firstly, general tax planning for your structuring of the buy to let SPV company. You should use a specialized consultant instead of just buying company or creating company online through company website. Because when you create a company from online from the website company house, it's for general purpose. It's not for a specific SPV purpose or property buying purpose, because you have to customize the purpose code and then customize the legal documentation like bylaws and articles of associations, customize shareholder agreements, right? Customer director loans agreements. These are the specific things need to be done to optimize the tax efficiently, your structure. And then
And
once
we
you have,
do, and we
yeah,
do all this. This is all free under our services, right?
yes.
Yes.
So if it is sourced from the metal property, I provide these services as a part of this. Okay, but if you reach out to me separately, definitely it will be a different arrangement. Okay, so you can pay less tax or minimum tax using your effective profit distribution. So profit distribution means whatever earning in your company, if you want to take out that reserve money, either you can take as a dividend or director loan settlements. If you're doing the director loan settlements, there is no tax to pay in a personal name. If you're taking out dividend, there's a list tax compared to your personal income. So no SDLT when you buy a company. Yes, there's a question also in chat also. So when you buy a company, you don't pay SDLT. SDLT is a stamp duty, land and tax. So you don't pay SDLT, but you pay stamp duty. Stamp duty is 0.5% on the share price. Okay, but the SDLT is 3% on the property price. Okay, so that is what difference. So no SDLT when you buy SPV company, and when you sell SPV company, you are selling a share. So your capital gain tax would be 10% to 20%, based on your tax bracket. But if you are selling as an individual, it will be 18 or 28% based on your bracket. Now, what is the trust planning involved in that? So For the IHT purpose, you can set up a company, legal documentations, and the shareholding in such a way that it is tax efficient when you are leaving legacy for your child or your ongoing generations. And are there any other business structure than a limited company? I don't think so. I have heard UK limited company structure is the most effective and easy way compared to any other countries um, structuring setups. But that is what I can say. There are some certain way LLP on setup. Those are fashionable, but right now the limited company option is the most fashions right now and tax saving strategy. Yes, I'm done with that. Back to Ranjit.
Thank you, Rajiv. Thank you, Ajay, and thank you, Shares. And thank you all for joining our session. It was wonderful to have your questions asked, and I'm hoping that our panelists
One
have
question, sorry,
answered your questions. Yes, yes, Ajay, go on.
before everybody starts dialing out, there is an offer right now going on with us that if anybody within a week buys the property or actually decides to buy the property with us, the sourcing fee goes down. We want to encourage those. The sourcing fee goes down at least by £500. So not at least, that's the £500 sourcing fee we will deduct. So
That's encouraging. That's
yeah,
encouraging.
so from £2,500, we are just saying £2,000, £500 off.
Okay.
Okay, I can take one or two questions if anyone has. I think I see the Anup Chanda has asked question. Can we employ our spouse as an employee of the SPV? You can if you have a portfolio of the property, but if you have just one property, it's like reasonably not making sense to manage one property to employ your spouse. But yes, you can do how you structure the salary. That is a different thing. Like you can put 2 hours in a day or 1 hour a day. That is also possible. Any other questions or anyone for any panelist? Any questions? Recording will be shared. Yes. Where is your team based? They are mostly around London, but we have a builders network and our local agent network in every places.
No, we have the local employee as well who is
Yes, yes,
working in
that's what I
helping.
was saying. Yeah,
Yes, yeah. So
local team
come to
at
Durham.
all the places where, for example, Durham area, we have all builders and local agents who can manage our properties.
And you get the property review every 3 months if we are managing it. So, as I said.
Hey, one question from Raj: how it is possible to become property owner with the 10K? How will go towards deposit and etc. 10K deposit is the plan where we are helping people to start in the property investment career. So what we can do, we can make a joint venture of 4 people, at least property which has a price of 40 to 50K, and 4 people are shareholder, equal shareholder, or whatever investment amount is there. So based on that, you are that shareholding owner. So you are owning the property in that property sharing. So this is just a starting ladder to come into the investment area.
I think the more you up your stakes, the more profit margins you incur,
Take it this
right?
way. Take it this way. If instead of 10K, if someone has got close to 25K, probably not probably, we can certainly make someone the complete properties owner. So that yes.
Recently, we have sold one property, Ajay. He has put down 25K deposit and he purchased 80K property price.
Yes.
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 So 80 or 85K. So in that case, you are complete owner because you are getting mortgage.
Yes.
Right. So for mortgage criteria, this is like something property price should be around, I think so. Sales can correct me, but minimum 70K, I guess. So property price should be.
And you know what? If someone is ready to invest, as I said to Ram over here, if someone is ready to invest 50K with us, yes, in 2 years of time, we can make 3 property, at least the ownership of 3 properties. But straight away, if somebody has got 50K, at least 2 properties we can buy them for them. So yes, that it's that easy.
Our next question, do you have expat clients? Yes, we do have. So the one of the question was like, how can people buy expat in UK? We manage through the SPV. So investment company will be different, and your SPV company would be managed by a local UK resident, so that you can get easily mortgage if required, right? So that discuss option can be discussed later on if you want to go through that route. Uh, are you also functional in Edinburgh area, Ajay? Edinburgh?
Okay, so I had the same question from a guy called Jazz today morning. He was calling me. So the same question came. So I said, like, I can do anywhere the property management. That's not a problem. I can help to buy anyone. But where we want to stabilize, specialize is where there is a growth, higher growth. First thing first, not the property can drop easily. And why did we choose the England? Because England is very stable market. It's not up and down. So anything happens, suddenly you see that property gone down. So we want to get that investment into those areas. At the same time, wherever we go, we should go with the quality. So we can say commit everything, yes, but we will not be able to efficiently manage. Then that's where we don't want to put our hands. So at the moment, we haven't touched the Edinburgh. However, that's something we are considering because we see a higher return rate over there. But at the moment, no. We can start thinking, but we are not doing it right now. We are focused right now in the Northeast.
Thanks, Ajay. Next question from S. What is the minimum investment as a single owner or limited company? There's two routes. Either you're going through mortgage or full cash buy. You have an option. So if you're going for full cash buy, then you can start with a 10K and you can make a joint venture of 4 people and buy property with that cash deal. If you are buying from mortgage, definitely you can get for, as I said, 70 to 80K property. So that putting down 25% deposit, at least 25% deposit, then you can get that mortgage with that price, and you can keep full 100% ownership of the property. Next question from Kapil. Any website you guys have to contact? There is no website at the moment, but there is an email ID and WhatsApp number. We have a website, but just a landing page. So you can contact via social media channel or directly to us. But we will be having a website very soon.
There's a good question. Do you share the list of properties to choose or invest? We keep, see, none of the properties stays with us more than a day or two, kind of. Yeah. So it comes and it goes. So we keep giving the deals to the people who have bought early from us. That's the first internal group that we have got. We flash the deals to them. If they could not get it, then we give it to those who are done with the registration of the events and who are actually from the public group. So we flash the deals to them. If not, then it goes to the other areas as well. So, but literally, I don't get that many chance to publish to the outside world. So we will keep publishing our deals every day, kind of, every now and then.
Right. So we are getting questions, but I think so we have some time limit.
Is it possible for the investment to be mostly hands-off? I mean, how to manage? But that's a very good question, and I think that's where we specialize in. That this is the reason we came up with the solution that end-to-end management, right? So what we said that okay, as far as sourcing is done through us, we will do the end-to-end management for you for the property. So no management headache, peace of mind, I would say.
So Ranjit, we have received many questions in the form, right? So what we can do, we can schedule another series or later day, then we can communicate.
So there are not all the questions we could not address because so I think that next week we should go for another because we have lots of other questions left.
Yeah, for sure.
Yeah, stay tuned for the next one next week around the same time.
Yes, and in the meantime, if anyone has got any questions, you have the email ID, you have the WhatsApp number or the Facebook and Twitter account on the screen. Please get in touch with these details and your questions will be answered individually. If not, we will have another session where the same panel will come in and probably answer your questions. So stay tuned and watch this space. Thanks.
Yeah, ready to get 500 if you manage to lock the deal this week.
Yes, yes. I'm sorry, I forgot that.
Yeah.
Yeah, early bird prize. Yeah,
Yes.
one of those
I mean,
discounts.
this is not the say reason. This is not
Yeah,
the kind of offer and luring the people. I don't
yeah,
want to get into that side. Or I'm saying that if I need to replicate the success, and if there is a mission to replicate my success, I will help as much as possible. You know,
sure.
so we are not greedy about the money, but we are greedy about the success, quick success.
Yeah.
Okay, before closing, some of the technical mortgages questions were there. I think so. I think says from HR Financial Services, if you contact them, if you wanted to get some commercial mortgage or any residential mortgage, you can contact them by reference from Mental Property. He can able to help, definitely.
All right.
Okay.
Or write to us.
Mhm.
We will.
Yes, yes.
Yeah,
Yeah.
sure.
Anyways, thank you everyone for joining us on this Saturday afternoon. Thank you once again, and a happy new year to you. A bit belated though, but happy new year
Yeah.
again. Yeah.
Thank you.
Thank you.
All right.
Thanks
All
all.
right.
Thank you.
Thanks. Bye.
Thanks, everyone. Bye bye.
Bye.
Bye.